Just another easy money trade, home run hitter on this one. Let's count it down. 7, 6, 5, 4, 3, 2, 1. Say it with me.
Easy money.
Hey guys, JD here. So buckle up, because the information that I'm going to share in this video here could probably change your trading career. I mean, there's not many videos that I say that in, right? But this series in general that I'm doing, this is part 2 of a part 3 series here on Fibonacci, on the Fibonacci retracement tool. This one, this whole series here is like a game changer. It's a trading journey game changer. All right, so if you did not watch part 1, stop what you're doing right now. Leave this one, as juicy as this about to be. Go back, watch part 1 first. All right, then come back, all right, and dig in to pick up all the gems that we're about to drop in this video. All right, so in part 1, I taught you how to draw a Fibonacci retracement. Right, you start at the bottom left of your screen or the top left of your screen. You're trying to find the first trend leg. We understand the market cycle. We understand the market moves in twos. And so with the market cycle, you get a trend up, trend break, retest. All right, that's the classic market cycle. So what the Fibonacci does is you draw the first leg, and then it shows you about the area where the second leg can begin. All right, that's the power of Fibonacci. But why does that happen? Right? What's so special about the 50% zone, right? How is it that you can go on any price chart? How is it that you can go on a Forex chart, a crypto chart, a futures chart? How is it that you can look at an index? How is it that you can look at a euro chart? Why is it that you can put a Fibonacci retracement zone on any Japanese candlestick price chart, right? And you will notice that over and over and over and over again, prices tend to turn right at the 50% zone. Why does that happen? Is that a phenomenon? What's going on behind the scenes? Okay, I have 2 possible reasons for this. All right. Now here's the thing. I don't have a lot of proof. Okay. I don't have a lot of proof. I've never worked for an investment bank. All right. I am not an accredited trader. I'm not a professional trader. I ain't got those credentials that brainiacs may want me to have. I just been in the market. I was just taught this, and from my winning percentage, it's true. All right. Just leave it at that. So first reason why I think this happens, okay, is because, and it makes a lot of sense. Here's the deal. I'm a retail trader. All right. When you guys see me take a trade, I'm taking what, like 1 trade at a time, 2 trades at a time. Okay. Well, large investment companies, large institutions, government agencies, they are not placing 1 trade at a time like a retail investor would. Okay. They're just not. Right. People who create the market makers. Right. When I place a trade for $100, do you really think my $100 moves the market? All right. So what I mean by that is, when I place a $100 trade on Apple, right? Did I really help Apple's price go up with my little $100? No. Right? No, not even a drop in the bucket. Right? I did. My $100 did absolutely nothing. Okay. But when Microsoft buys some Apple stock, right? Or when BlackRock buys some Apple, or when Bank of America buys some Apple, or when a big hedge fund buys some Apple, okay, right? When Berkshire Hathaway buys some Apple, right? Or when I'm running out of the big boys, any of the big boys, right? When it was something else other than hedge funds, like those retirement funds. The name is slipping my mind right now, but big money, right? When big money buys Apple, that moves the market, right? The Apple price will go up. You know what I'm saying? When billionaires, trillionaires start buying Apple, the price of Apple stock goes up. And this happens in any asset, all right? Any asset class, any commodity, whatever the case may be. So here's what I'm saying. What most people don't know is that big money are using what is called automated trading robots to put these orders in, right? They're not just buying billions of dollars one order at a time, right? They're putting a bundle, let's call it a bundle. They're putting a bundle of trades in at once, okay? Here's the kicker. Here's the kicker. The key was when I said they're using automated trading robots, and you can just Google this. Google automated trading robots and see how many big names pop up that say that big companies, big investment firms, big hedge funds, they're using robots to trade. All right. So there's the clue. They're using robots to trade. Okay. Whenever you're using a robot, a computer program, it has to be programmed. Okay. So this is the secret sauce. This is the gem of all gems. This is like the secret trading knowledge of all secret trading knowledge. These automated trading robots that a lot of big companies, big firms are using are programmed off of the premise of Fibonacci retracements. All right. So the reason why you see prices trend up, come back to the 50% 618 zone, and then start a second leg so consistently, so often, is because that's a computer program that big companies are using that causes the market to turn right at the 50% 618 zone. All right. So when you are following a trend up, and you set your fib on it, when you enter at the 50% 618 zone, what you're really trying to do is trade with smart money. You're trading with big money. You're trading with the hedge funds. You're trading with the Black Rocks. Okay. You're trading with the large corporations who are using trading robots to enter right in that same area. So that's why it happens. Okay. That's the why behind Fibonacci retracement zones, right? That's why I trust them, right? Because I understand there's a high probability that big money is going to enter some more orders right here. So that's number one. Number one reason why fibs work is because automated trading robots that are used by big banks, big investment firms are using Fibonacci. There you go. So that's why. And so that's the why. So here's the second reason why I believe you will see prices turn so much at that. Again, my little $100 don't do nothing, right? My little $100 doesn't move the market. But let's say you are BlackRock. I just like the way that sounds, BlackRock. Hey, I love your name, BlackRock. BlackRock. I love it. So let's say you're BlackRock, right? You got millions of dollars to move today, just today, right? But you want to get your clients the best price, right? You want to make as much money on these movements as possible. So you start the trend off, right? You come with a bundle, one bundle. You come with one bundle of orders, right? You get the market moving. Prices start going up. You bought Apple again. They get the market moving. They're the market makers. They get the market moving. Apple goes up. Everybody else jumps on the bag like Apple goes up, right? All the counter trend traders who don't understand price action, who don't understand the market, all the noobs, right, think that the trend is over. So they start selling. Okay. The Apple price starts to come back. All right. So BlackRock isn't going to keep putting orders in while prices is way up here. They've already moved the market. Prices is high now. So they're trying to make money for their investors. So they're not going to put more orders in way up at the 30% level, 20% level, 10% level. Why do that when you know counter trend traders are going to push prices back down because they've trained you guys to counter trend trade, right? So they can put prices back down. You know, these big companies have put all this bad common trading knowledge in the industry to get you to counter trend, to get you to push prices back down for them, right? They've trained you to do the opposite of what they're doing. That's a whole nother discussion. Okay. But that's what's happening. And so BlackRock is going to sit back and wait. We moved the market. Prices went up. Let's wait for prices to come down. We got to make our people money. We got to make our investors money, right? So let's wait for prices to come down. So they wait, right? But again, they've already programmed this into their automated trading robot. So what they just let counter trend traders, the natural market flow, push prices right back down to that 50% 618 zone. Then they say, all right, we're not expecting prices to go back down where we started it at. But now we've gotten 50% back. Now we can put our second bundle of orders in. Now this is just my theory. This is all my theory at this point. Okay. But this is what I think. This is my educated guess on what's happening. Right. So now they say, hey, let's put our second bundle in. Right. Because they had millions to invest for the day. They already did, let's say 10 mil. All right. We got another 10 mil we want to put in. So then they put that second order in right at the golden ratio, right at the 50% 618 zone, right at the sweet spot, right? Boom, they put that second bundle of orders in. Now we get the second leg. That's just my educated guess. The market moves in twos because investment banks put orders in twos, in bundles. And I could be completely wrong about that. All right. I'm being honest with you. I could be completely wrong about how they put the orders in bundles. What I do know from trading every day is that the market moves in twos. The market loves to bounce at the 50% zone. Okay. And I know that investment banks are using automated trading robots. All right. So take this information for what it's worth. All right. I showed you guys in part 1 how to draw the fib. All right. Now I'm explaining why you can see this happen all the time. All right. And listen, you all have access to demo accounts, right? Go out there, go through some old history, find some trends, throw a fib on it, and prove it to yourselves. Okay. You do not have to take my word for this. You can go out on demo. You don't have to waste a dime. You ain't got to risk a penny. You don't have to, you know what I'm saying? The only thing you will lose is time. Okay. Invest some time to see if I know what I'm talking about with this. All right. Invest just a little time to either prove me wrong, prove me right, but go get some proof, right? Jump on your accounts. Forex don't matter. Crypto don't matter. Binary options don't matter. Find a chart. All right. Watch video 1. Learn how to draw the fib correctly. Then go mark up some charts with fibs and see if you don't see the market turn at the 50% zone at a high clip. It's gonna make your head spin. All right. and you will realize all the struggling you've been doing. All the struggling you have been doing in trading can end today. That's just, man, it still boggles my mind that still boggles my mind that you can go from a losing trader to a profiting trader overnight by just learning about Fibonacci. It's mind-boggling. It's mind-boggling. And then when you combine it with price action, that's the beauty of it all. It fits into exactly what I've been teaching. The rule of 2, market cycle, second entries. It all connects. That's wow. I mean, if you're a new beginner, if you're a beginning trader, you have struck gold with this series. I am saving you years of pain, heartache, struggle, flat out money, right? I just saved so much of your hard-earned cash. If you go out here and improve me on this, watch video 1, learn how to draw a Fibonacci, go test it, go mark up as many charts as you can find, prove it prove me out on this, I just saved you so much money. All right. So that's the lesson for today. That's the lesson for today. Right now, again, let me say it one last time. If you don't know how to draw the Fibonacci correctly, watch part 1. Go watch part 1. I put you on that one. All right. I put you on that one. So this was the second part. In this video, I just want to talk to you guys and give you the why it's happening. Automated trading robots. And I believe, don't have no proof on this, but I believe that the big market makers just like to put orders in bundles of 2. One bundle, get it going, wait for kind of trend traders and news to pull it back. Second bundle, make the investors more money at a better price. They trying to make money, right? They're trying to get in at the best price at all time. So that's my spiel on it. But you can Google and see that big companies use automated trading robots. And what most traders, especially newbie traders, don't know is that all these robots are programs. They're computer programs. And computer programs have to be based on something. They have to be based on something. And that something is Fibonacci retracement zones. All right. So this is a great time to like, share, and subscribe. I greatly appreciate you guys. Hey, if you've tested this out, or after you go test it out, hit me in the comments, right? And just put Fibs rule. Okay. If you game now, put Fibs rule, or, you know, something about Fibs, right? Because Fibs is where it's at. It's easy. It makes trading easy. All right. So I greatly appreciate you guys. Until next time, my name is JD. And as always, I wish you increase on the Sutton. Bye-bye.
Looking for profitable trade ideas in the Forex market? Want to learn a unique strategy based on price action and Fibonacci retracement zones? Join our trading community now for just $10 a month and receive trade ideas and binary options chart markups straight to your inbox.